Santam is a short-term insurance business active in personal and corporate markets with a market cap of 19.4 billion rand. It also operates in Zimbabwe, Malawi, Uganda, Tanzania and Zambia. It was founded in 1918 in Cape Town and is the local market leader with a 22% market share. It has a dividend yield of 3.4% and trades on a price to earnings ratio of 13. So market leader within this space. Santam, your thoughts on Santam?
Yeah, as you said, established back then, it was kind of partnered with Sanlam, which was for the life insurance. And I think that's an important point. We're talking here tonight about, short-term insurance, which excludes stuff to do with life. I quite like this business. It's well established, well run. I like the CEO, Ian Kirk. As you say, they're market leader, so 22% is as big as it gets. The other big player in the market is not listed anymore. That's Mutual and Federal. That's part of the old Mutual group. And then there are a whole string of others that we'll talk about tonight. Zurich is there, which is the old SA Eagle, Alturance, and so on and so forth. But Santam, there's a connection now. Sanlam used to be partners with it. Then it wasn't. Now it's back in. They own 56%, I think, roughly of Santam.
So Santam very much looking into the African continent. I did mention a few countries. Last year, it spent about 200 million rand on theory acquisitions in Malawi, Ghana and Nigeria. Your thoughts on the strategy that it has taken in terms of the African continent?
Well, I mean, Santam, if we just take it back to South Africa, it's market dominant. It's looking for places to grow. So that's why it's going into Africa. I mean, there will be more need for insurance in Africa as people buy bigger assets. I mean, you insure against an asset you can't afford to lose. You don't insure your pen because if you lose it, it's 10 rand, you buy another one. Whereas if you lose your car, that's a big financial knock. So that's why you insure against those losses. So we've seen a lot of businesses from South Africa. We've seen the retailers, the insurers will do it, the banks are doing it, all migrating into Africa, trying to follow and find more markets and unlock new markets and new profits for themselves.
Let's look at the share price. Paul, I'm not sure where it's sitting at this stage.
The last
about
couple of years, it's been moving up now. It traded all-time high there around 165. It's currently around 163. So doing very well. But here's the problem. As I said to you before, they make profits as a result of their underwriting activities. And that comes and goes depending on whether you have lots of hurricanes, floods or hailstorms, right? Then they also make money from their investment statutory reserves. And that, for me, is the problem with this industry. It introduces a degree of market cyclicality to your portfolio, and who needs that? You've got that in your portfolio already. So I've always said that these companies should really be owned by each other because they can soak up the cycles in terms of the profitability. I'm not a big fan of the insurance industry at all for ordinary people as shareholders.
So it should be owned by each other like Paul is alluding to. Now looking at Santam, would it be hot or not on it?
I just think Santam it's very well run. It's going to pay you great dividends in the future because the South African market isn't really growing that much. It'll grow at nominal GDP. But with it being a market dominant player, it's not really going to take a lot. So, and it's moved a lot recently. So I would say it's not hot.
Not hot for Santam. Your thoughts, hot or not?
Yeah,
for
look,
Santam?
Despite the cute ads with Ben Kingsley and the guy walking around on the beach and so on, I'm going to say not hot. Again, high share price and the industry, etc., prone to cycles I don't want to be part of.